All right, everyone. It's only one day removed from yesterday's session where it felt like that we were going to completely roll over. One of the most bullish signs you can see, obviously, is when a stock or a market looks like it's about ready to roll over and instead has an excellent reversal day, solid session closing near the highs. We saw that on the NASDAQ. Volume was higher significantly from the day before. And like I said, during this entire consolidation-like trading action we've seen lately, breadth has been excellent in the overall market, and that continued today with very strong breadth. Many more new highs and new lows, and my short scans are just basically empty. And they have been this entire pullback, which is another indication that this market wants to move higher. Another one is that my long positions, I told you as we were pulling back, some of the new ones were failing, but some of the longer ones were not. That's a hopeful sign. If the longer term positions, more like middle February, early March, and the newer positions were all failing, some of them, or a lot of them, then I'd have been much more nervous about the pullback. But like I said in my commentary yesterday in the new positions page, not that nervous. Overall, market looks good. Don't want to look too much more into it. The QQQ confirms that with the pocket pivot point signal. NASDAQ 100, you can see strong volume surge. Very nice day. The Russell 2000, even better, up 1.04%. The IWM, volume's below average, but you can just look at the overall volume action. The green bars aren't being beaten by the red bars, but the price action is excellent. And if you look at the URTY, which happens to be a new long this evening, a very rare ETF signal on its own, non-hedging, non-trying to get long because I'm underinvested, but an actual legitimate long signal from a leveraged ETF. URTY is in my ETF scan, confirmed in my price volume BOP scan. So it's a 2% long position with that big volume surge and pocket pivot point signal with an increase in BOP. Very, very tight. Looks like it wants to break out. S&P 500 also performing very well. The SPY confirming pocket pivot point signal. New York Stock Exchange retook its 200-day moving average. Excellent sign. Took it out, fell below it, didn't break down, now breaking back out above it. Overall, excellent action. Dow Jones Transportation Average is holding up, and the Dow Jones Industrial Average also looks like the IWM. So you got large, big caps and small caps all looking good. Flagged a few names tonight like CVX, flagged AMSG. It's too early. Tell you what though, you could do an early cheap pocket pivot point buy if it breaks out above these most recent highs. You could even buy it here. But I was wrong yesterday. I thought I had like 20% cash like in my cash account. Man, I'm like around 10%. And after entering my orders just in my cash account before moving on to my margin account, I got that message that tells me you're fully invested. You have no more money to put to work. So I'm actually following if all the long signals go tomorrow and the few limits, because I didn't get filled on RHP and STOR. They gapped above my limits, which would have been the high of the day. You can see the high day was 26.23, fell to 26.24, so I missed it by a penny. It's extended now, so I believe that I can pull back and get it, and it'll be fine. RHP is good, but I got a limit, moved up my limit from 50.31 to 50.48, so now, hopefully I can get long these names. But, there's a lot of good charts out there. MBRG, a little speculative, extended. OIH, on the ETF side. Sky, look at this high tight flag forming in this potential big runner, materials and construction stock, but excellent technical pattern. BSBR, more on the speculative end, looking at those Brazil stocks, looks very, very, very bullish. You got SKT, the REITs, MCF, like I said, the oils. SJR is a media stock. MTX showed up in my perfect speculator scan because from its previous old 52-week high to low, it qualifies, but right now it's too early. But that showed up, and that's in the perfect speculator scan. PXD showed up in my perfect speculator scan. PVB breaking out of a small little pattern. And overall, KERX looks really good. It's just too early, but this is one of the max green BOP longs that I'm looking to get. Hopefully it can continue to move out a few more days sideways, then do a pocket pivot point signal without being up 10% in one day or whatever in the hell it likes to do whenever it really moves. Hopefully it's a nice quiet signal. So like if today would have been a pocket pivot point signal, KERX definitely would have been a new long this evening. if it would have pocket pivot point signal, but it did not, so it is not. So the new longs, PNK, CanSlim quality. Everything isn't exactly perfect. That 20-day moving average that I told you I want to be touching isn't quite touching it, but here's why it's a new long. Very bullish short-term pattern. It isn't too far extended from its 50-200-day moving average, but more importantly, that long-term chart. It looks like it can continue to move up without pulling back that much, and then maybe it can make a real handle and break out. Of course, I thought this with ORI. ORI did not. Oh, we got to go even further out with ORI. Maybe that wasn't the right one I was thinking of. I think it is, though, looking back out to here. But it didn't work out, but it didn't look as good as PNK does. PNK looks a lot more bullish. Its fundamentals are much better. So PNK is leading stock. 2% CanSlim, 1% for being price volume bought, 3% long position. We don't risk much if we're wrong. I'll be using the 25-29 level as my final sell stop. But nicer looking longer term chart going back to 2015. Very bullish short term and isn't too extended, even though it isn't touching the 20-day moving average. Now more proper long signals, HFFC, pocket pivot point signal, extremely thin name. Limit orders only, position size accordingly because there's bound to be a lot of slippage if it starts to race to the downside. But I don't feel like I risk that much. Bank stocks look really good, savings and loan stocks. The banks, big ones, try to take out the 50-day moving average, and they haven't so far. So it's kind of, since they're not running into earnings, they're kind of setting up for a potential, gap higher. But HFFC is joining some of my other names like CBNJ, MNRK, PACW as a new long signal since these small financial stocks are doing good. So 2% CanSlim, 1% for BOP. You can make it smaller because it's a little speculative. And then EPIQ, CanSlim quality on the earnings per share and sales side, EPS rating side also. Relative strength wise a little bit weaker, but still it's CanSlim quality. Huge volume surge today, huge BOP surge today, and I'm going to look deeper into it, but so far all I saw was one news article today, and it doesn't really account for this huge volume surge, so I got to find out what it is, and if it's quite accumulation, then man, somebody took a huge position in EPIQ, and I guarantee they're not done. But EPIQ, 2% CanSlim, 1% for being price volume BOP, and then like I said once before, URTY, 2% overall. Sell side, MXL is closing below the 50-day moving average and above average volume with the red BOP and heavier volume and the constant action like EBIX. What junk, for a excellent fundamental stock. It's technically a 50% sell signal. However, if you want to just move up that stop to 1761 on half the position, that would work. And or you could do 1707, but no matter what, I would not let it get below 16 at all. I mean, if it goes below 16, you better be out of the whole damn thing. I mean, that's just a complete, utter failure if that happens. And then ALRM, none of it clipped my intraday sell stops, thank goodness, but now it's time to raise stops. Closing below the 50-day moving average, and the 2164 close is below 2183. Should have held that support low, so I'm moving up half my sell stops to 2115, and then I'll have them staggered throughout like this low area and this low area here, I think. So here. So I'll have 50% here, and then I'll probably just do 50% right here. That's probably what I'm going to do, 50 and 50, there and there. And then full cover, Netflix. It's done. So Netflix we are out of on the short side, which means we have no more short positions. And funny enough, it's now back in the perfect speculator scan from the 52-week high to 52-week low range being over 100%, or 75%, I think, for the one that it's showing up in. No, it would actually be the full-on 100% one. But for now, Netflix is not a new long position. We got to see how it works out. But Priceline is stabilizing, Google is stabilizing, and Facebook is not breaking down further from that distribution. So those are positive signs. For now, the market looks all right. It looks like I'm going to be now fully invested. I still have my VIIX position. It is not failing. Remember, your first sell stop level can be 2387 or 2343, and then your final sell stop level is 2299.